Good morning, good afternoon, or good evening, wherever you're joining us from around the world. Welcome to Web3 Warriors, episode 43. And today we're going to be talking about central bank digital currencies, also known as CBDCs. We were planning to have Joshua Skagala from thestandard.io joining us today. Unfortunately, he had a little bit of a time conflict. So we'll see if we can get him back on the show at another date. So today's episode will be a little bit brief, but welcome everybody. I'm David Krome, your host. I go by Krome in the metaverse, and I just want to have a kind of brief conversation today about CBDCs and their potential impact on the Web3 and crypto space. I want to thank anybody who's joining in the live chat as we host these every Saturday, really trying to create space for not just the NFT and Web3 community, but also the gaming community on Twitch or YouTube, wherever you may be. If you have any questions about what Web3 is all about and what this whole kind of new creator economy that we're building on the blockchain is really focused on. I'm sure you hear a lot about metaverse, and now, Facebook changed their name to Meta, and they're trying to take over the digital world. But it's a very kind of complex and nuanced landscape, really, with this new Web3 space built on the blockchain. It's immutable, it's accountable, and it's really exciting. So I'm actually looking at hosting a first IRL in real life workshop here locally in Manitoba, Canada, where I'm at later today, where we're going to be onboarding folks who know very little or pretty much nothing about Web3 into the space and really showing what's possible for creators. So quick plug to Motto Workspace. You can check that out at mottoworkspace.com. We're going to be hosting our first workshop later today. So it's unfortunate that we don't have our guest here, but I do think that the topic of central bank digital currency is a very important one. So if anybody has any questions, definitely from the live chat, you can help keep the conversation going. Otherwise, we'll probably keep this brief, maybe 15, 20 minutes or so, really just kind of talking about what central bank digital currencies could mean for the space, maybe best case scenario and worst case scenario. And then we will also just play a short clip from YouTube, which will not be included, obviously, in the official podcast, kind of showing the dark side of CBDCs and probably the worst case scenario. But I think it's an interesting perspective for people to be able to view. So looking at central bank digital currencies, you can actually look at China as probably, I would say, the worst case scenario of what's possible with central bank digital currencies, right? So they have a whole kind of social credit system that has essentially been attached to their central bank digital currency. We'll just call it digital currency going forward because it's a lot easier. But essentially, it is very trackable, right? So the digital ledger, the blockchain, distributed ledger technology, DLT is what they call it in kind of the dev and finance circles, which doesn't necessarily require the crypto element, right? So it's a very important kind of distinction. You have the central bank digital currencies, which are really just the fiat currency put onto a digital ledger. So in many ways, it still has all of the downsides, all of the compromises that general fiat currency has, which is to say the government can decide how much of it exists. The government can do a whole bunch of regulations that will impact how effective that central bank digital currency really is. But most importantly, it can print or create an unlimited amount of the currency, which really devalues the currency, right? So when looking at cryptocurrency and going way back to the original Satoshi white paper and what cryptocurrency was setting out to do is really avoid kind of the governmental interference in the currency that often leads to it being devalued, leads to high inflation, which leads to a whole bunch of other kind of social domino effect that often leads to uprisings and upheavals and a lot of unfortunate scenarios that play out kind of in society, right? So when we look at China, for example, the way that they're using their CBDCs is really kind of tracking, who's spending money on what, kind of really putting them into different tiers in society and using it to have a really minute kind of like granular detail level of their citizens and what they're spending their money on. Now, of course, the West has different ways of also kind of looking at using our monetary system for data and being able to track our citizens in a variety of ways. But I would say, looking at the central bank digital currency, which America is currently looking at, I believe the EU just kind of rolled out their own as well. There is obviously a whole new layer of tracking that is available. So this is kind of the worst case scenario side of the CBDC conversation. Again, central bank digital currencies that are being rolled out by different governments to basically get ahead of the digital currency momentum that's happening really in the crypto space and being led by the crypto space, at least in the West especially, where it's been allowed to innovate and flourish, and people in general have pretty good access to actual cryptocurrency, right? So looking at that and comparing it to the CBDCs, it's very important that there is a distinction. Now, when we look at the way America is kind of framing their CBDC, and they are definitely often talking about it in the context of crypto, right? Ethereum, Bitcoin, and this new CBDC we're trying to roll out, right? And you can look at stable coins that currently exist, which would be like USDC, USDT is one that some people say is a little bit on shaky ground. DAI, is another stable currency or stable coin that is actually a little bit more decentralized, I would say, than both the USDC or USDT, but also has its downsides, right? So I don't claim to be an expert on the tokenomics, which is why it's unfortunate that we weren't able to get Josh Skagala here, who is a little bit more of an expert on these topics. But looking at, so that's worst case scenario, right? These central bank digital currencies allow for a lot of tracking by government, which can lead to all kinds of additional requirements and really tiering citizens. And, right now we have credit scores, right? So just imagine what they could do if they actually really can define every little thing, every line item you're spending your money on, and then decide that people who spend X amount on wasteful things, belong in this tier, and whatever the case may be. It's just worst dystopian situation, right? That the government just has way too much data on citizens and uses that for nefarious reasons. But maybe on the best case scenario, right? Because money is getting digitized no matter what. And I think this distributed ledger technology is going to be embraced no matter what. So the question becomes, how does cryptocurrency and this Web3 space that we're out here building and enjoying, and really emphasizing the decentralized nature of it, and the fact that we can do peer-to-peer transactions with anyone across the globe and really help communities on the other side of the globe raise funds through their creative endeavors on the blockchain, which is a lot easier than when you're trying to send wire transfers internationally to support someone, or purchasing something from them online. But they have to go through their traditional financial systems, and by the time the money actually gets to them, maybe they got 60% of the funds or 50% or less. When it's on the blockchain and it's peer-to-peer, the funds are going direct from the person purchasing that creativity to the person who created that creativity, right? And maybe the platform in between takes 3-5% maybe, but it's a much more equitable scenario. And that's what we're here for, right? So when looking at the central bank digital currencies and how they can actually potentially help that transaction, right? If they're going to play a role of actually supporting the innovation of the blockchain and this peer-to-peer, economy, and this decentralized Web3 creator economy that we want to see continue to flourish, I guess the best case would be that these new CBDCs are just a quick off-ramp, right, for people to actually get their money into, whether they want to use it to pay bills or they want to use it for real world expenses and take it off the blockchain. Best case scenario, these CBDCs make that kind of instantaneous and remove some of the barriers to really off-ramping your currency. Now, those barriers aren't as bad in the West. I think when I look at Nigeria or certain countries in Africa where the off-ramp, turning their crypto into real usable fiat money that they can then pay their bills with, or invest in infrastructure, invest in their communities. In some corners of the world, it's more difficult. So ideally, if CBDCs can play a positive role in Web3, and again, it's a big if, a huge if, most people would argue it's kind of just a Trojan horse, and there's really no way that government getting more involved on the blockchain could be a good thing. But at the same time, we see what happened with FTX, right? We've seen what's happened with some centralized exchanges, and the people that have really been hurt by FTX most recently and other centralized exchanges that have gone under are out there crying for regulation right now, right? And they want some kind of security to prevent this from happening. And the big so-called industry money is waiting for those regulations to be more clear so that they will get more involved in the blockchain and in cryptocurrency. And there's no doubt that central bank digital currencies are going to be an important element of that future digital economy, no matter what it looks like, right? So that's a lot. So I think those are kind of the best case and worst cases scenarios, right? So the central bank digital currency is going to give a lot of power potentially to governments. And where governments do not have oversight, where governments are not changing often due to democracy and elected officials, that power is a lot more dangerous, I would argue. But if that power is implemented in an accountable and transparent way by elected officials who, can be removed or replaced reliably on a regular basis, and there's no, real centralization of power within one group, the hope would be that central bank digital currencies can actually be a positive evolution of the current fiat system and maybe make it a little bit more, little less friction with the blockchain and with the kind of new DeFi, decentralized finance that is emerging. Which is another question we had for Josh as far as, what is that conflict, right? The traditional finance, which is a lot more, I would say, accessible for people, although getting a stock exchange account is not that accessible. You do have to have a decent amount of money. Usually they'll require $10,000, $15,000 down payment. Again, that's not going through apps like Robinhood and others that are really kind of half-baked measures. They make you feel like you're investing in the stock exchange, but do you really own that stock? It's debatable. So this is what we're seeing right now, right? And fintech more broadly outside of blockchain is grappling with a lot of this as well. The digitization of finance, the idea that finance should be more decentralized, it should be more accessible and more usable for the average person. And businesses that are growing, you look at remittance payments, you look at certain type of businesses that are very international in nature, they are the ones who are going to benefit the most from decentralized finance, from the blockchain, from peer-to-peer connectivity the world over, And unfortunately, as it stands now, these businesses, when they're trying to work with the traditional financial structures and they're trying to move their money internationally, often these traditional structures will just throw up red flags and make this whole situation a lot more complicated than it needs to be. And so we're seeing a big push away from those traditional structures to the blockchain in order to move this money around, because it doesn't make sense giving 10, 20, 30% to Western Union to send your money abroad when you can literally do it for a much smaller fraction, maybe 5% of your costs, and send it on the blockchain. Now, again, the person receiving that money in some of these corners of the world, that's the hard part, is getting their money off the blockchain and into usable money on their side. And I do think ideally, best case scenario, there's a place where central bank digital currencies can help with that off-ramping of finances from the blockchain. So I think I've said a lot on the topic. I don't know if anybody in the crowd, in the chat, has any questions for us. That's most of what I wanted to touch on when it comes to the topic of central bank digital currencies and the kind of best case scenario versus the worst case scenario. And we're really at a crossroads right now for finance, even outside of the blockchain, like I was saying earlier with distributed ledger technology, it's going to be adopted. It's not a question of if, it's just a question of how the technology is adopted. And then what part does blockchain and cryptocurrency play in this new financial reality? And it's very important to kind of emphasize the fact that it is the decentralized nature of the current cryptocurrencies, especially Bitcoin and Ethereum, which I would argue are truly immutable, especially Bitcoin, because of how the network effect has worked. Ethereum, especially since they moved to proof of stake, there is a lot more points of central kind of authority, you could argue, where if, these massive holders of Ethereum decided they wanted to liquidate all their Ethereum or didn't believe in Ethereum anymore, the price would dramatically decrease, but it would not destroy the whole network. And I think it's sufficiently decentralized to the point where no one actor, even the ones that have huge amounts of Ethereum, yes, they can kill the price of Ethereum, but they cannot kill the whole network. So I would argue Bitcoin and Ethereum are the most immutable and truly decentralized blockchain cryptocurrencies that are out there right now. And what makes them so perfect and what makes them better than fiat, to put it plainly, is the fact that they're so decentralized, and the fact that, yes, their value is incredibly volatile. It'll go up and down in big spikes depending on how much is sold or bought, but the value that it has is in the fact that it is currency, that it has some real world value. Now, again, it's volatile, it's going up and down, but that real world value is always going to remain to some extent. And to the extent that the future is bright for cryptocurrency and as a digital gold, as you want to put it, some people put it for blockchain or for Bitcoin, there is that value in investing and saving and all that, which is not my strong suit. And I don't view it necessarily from that kind of stock exchange angle of just a purely investment tool. Here on Web3 Warriors, we're really focused on crypto as a tool for creators, crypto as a tool for the creator economy to get value for your creativity, to get value for your creation on the blockchain. And that is the utility, as is a big buzzword in Web3 that people want to throw around. And people want to go to the moon. They want the utility to be the fact that this NFT I purchased is going to be 3 times more in a month or 10 times more in a year or whatever the case may be. And that's fine if that's what you're into it for. But the real value from what we're coming at it from the Web3 Warriors and from the communities that I'm a part of, is really looking at the technology and what it makes possible, and emphasizing the fact that that ability to support a creator on the other side of the globe on the blockchain directly through peer-to-peer cannot disappear and should only grow from here, And so that's the risk, is that these central bank digital currencies essentially are a kind of Trojan horse, right? Where they want to make it look like they're pro Web3. They want to make it look like they're going to help this creator economy that we're building on the blockchain. But as soon as they become a part of the requirements, how you're going to get your blockchain back into fiat, they can start creating all kinds of rules on, what blockchain can be transferred into CBDC. How much can you transfer at one time, into your CBDCs, and all these kind of arbitrary rules that, for whatever financial currency reasons the government might want to put them in place, they ultimately would destroy the decentralized nature of Web3 and of cryptocurrency. So that's the big concern, and that's why we continue to watch this space, and it's a very important conversation for Web3 and for the cryptocurrency, and really for fintech more broadly, for the financial evolution of the markets, how these CBDCs are enforced, and how they kind of, whether they play nice or don't play nice with actual cryptocurrencies and with the blockchain, is going to really impact the space a lot. Now, I don't think anything they do is going to destroy Bitcoin or Ethereum. Again, I think that those two networks are sufficiently decentralized, and the network effect is massive enough around the globe that, yes, they can take huge chunks of it down and make it a lot more difficult to access, but ultimately it will live on, and the technology is too good for international commerce to avoid. So it's just a matter of how it gets enforced, and whether the governments that, create these new CBDCs are looking to play nice with Web3 essentially and help Web3 grow and evolve, which there's really no reason not to, especially from an American point of view, because basically the whole blockchain is backed up by US dollar. So it's US dollar coins, it's stable coins. I've done more stuff in US dollars since I got involved in Web3 than I ever did prior to Web3. I'm more aware of the currency exchange between Canadian and American dollars now than I ever was before. So that's just one example. So there's really no downside, especially from the American point of view, to really help Web3 explode and help Web3 grow, because it essentially helps the influence of the US dollar grow as well, at least as as the cryptocurrency is currently built, as the blockchain is currently kind of functioning, and I don't see it changing anytime soon, because ultimately the US dollar is a dollar that is doing better than most other currencies around the world, but it's also an innovation dollar, really, right? Like, people see the tech coming out of the West, the tech coming out of America, whether it's, Tesla, electric cars, social media, creator economy, YouTube videos, whatever the case may be. Like, you see YouTube billionaires now, right? Like, it's wild. This is the innovation that the Western world created, and really America deserves a lot of credit for. And that innovation can all help spur the blockchain and all help spur Web3 and the creator economy that we're building on the blockchain. So I'm going to leave it at that. I really hope that people are paying attention to the central bank digital currency conversation. And I do hope that Western governments that are, trying to lay this out and trying to create a 21st century financial system, really, that is both innovative and forward-looking, but is secure and safe. And that is the balance that I know is difficult from a government point of view. You're trying to avoid the FTXs. You're trying to offer some type of certainty in a market that doesn't like certainty. And so there's no silver bullet, right? But there are clear red lines that would unnecessarily hamper and really potentially destroy the creator economy that's been built in Web3 so far, if America, for some reason, made it much more difficult to turn their crypto into fiat, for example. The market would be hurt, Again, the tech would still survive, but the market would have a difficult time. All right, so do keep paying attention to this. Pay attention to the central bank digital coin conversation. If you have any questions, feel free to ask in the chat. Not sure how long we've been going on this now, about 20 minutes. It's a really important conversation. This is going to be our shortest episode so far. We'll see how it performs. Maybe I need to move away from the long form interviews that I love to have with all these Web3 and blockchain builders and creators, and move towards some of this more short form opportunities to really speak on a specific topic and look under the hood a little bit. But again, there's a lot more to look into. If you have any questions about central bank digital currencies, you can also hit us up on Twitter at Web3 Warriors. Happy to have a conversation about that. Or if you're an expert and want to be on the show, you can also reach out to us there, or email us at web3warriors@gmail.com. So with that, I do want to play a short video kind of showing what they view as the dark side of the future of finance and CBDCs. So this was released, just 2 days ago. So it's relatively recent. I think it's on point. It's kind of, I don't agree with everything it says. And like I said, I'm more of I still think there's a best case scenario and a worst case scenario. I don't think that the kind of worst case dystopian situation is guaranteed. And I do hope that we have some leadership from the government level, which I know is hard to hope for, but I'm trying not to be cynical. But I do think that there are people in leadership who do understand the value of Web3 and do understand the value of cryptocurrencies, and will hopefully help make CBDCs a benefit to crypto and less of a hindrance or a Trojan horse, worst case scenario. All right. Wow. Special shout out to Upper Echelon for that research and well presented breakdown of not just CBDCs, but also FTX fiasco, and the fact that FTX owner was somewhat connected to the SEC chairman. And it looks like, for whatever reason, their shenanigans seem to be overlooked or ignored for a period of time. So because I cannot, or I will not, share that entire awesome video in the actual podcast episode, I'm just going to give a quick plug to definitely check out Upper Echelon on YouTube and look up their video. It's called "This is the Dark Future of Finance, CBDCs." And you'll find all of the information that we just looked at. But a quick synopsis is that the Fed chair himself, Powell, I believe his name is, was saying specifically that if America is going to adopt a central bank digital currency, which is in a pilot phase right now, that it would have to be intermediated. So that means that current intermediators, which are financial institutions essentially, would have to basically be touching it or play a part in off-ramping or using your CBDC. So intermediated Number two was that your ID would be protected and there would be a level of privacy. But then the number three was that it should also require ID verification. So it's kind of a weird contrast there to say that it would, on one hand, have privacy protections, but on the other hand, be fully connected to your SIN number or your personal ID. So it's hard to kind of square that. And then the fourth part was that it also obviously has to be fully transferable and all of the great peer-to-peer connectivity that you get with distributed ledger technology, with the blockchain. So they want to try to have their cake and eat it too, essentially, is what it sounds like with this central bank digital currency. I want to give a shout out to Sasha as well, asked a good question in the chat, which was, are there any current examples of a CBDC that's been done right, that is actually maybe pro-crypto, pro-Web3, and actually helping with the off-ramping of cryptocurrency, essentially. And I would say that's still TBD. I've heard some interesting things coming out of the EU where their stablecoin is a little bit further along. But really, all of the stablecoins, I think, are really, for the most part, in like kind of a pilot stage. I think China, like I mentioned earlier, is further along, and they have their whole social credit system. So it is quite dystopian. So I would say, looking at what Upper Echelon was just talking about as far as worst elements of what's possible with the CBDC. So political intrusion was another very important point that he laid out, where one side wants to accuse the other side of being terrorists. And if people are relying on the central bank digital currencies, whichever side is in power can essentially decide, X group, whether it's Antifa, Black Lives Matter, Make America Great Again, whatever the case may be, they're terrorists. And so we're going to shut down their access to their central bank digital currency, for example. So that's, dystopian worst case scenario. And do we want to create a scenario where governments even potentially have that kind of power? Most would probably say no. But on the other side of it, technology is evolving. The cryptocurrency and the blockchain is going to continue to evolve, and governments know they need to get ahead of it somehow, or if they can't get ahead of it, at least play catch up in a way that is best case, kind of advantageous for society, I guess, ideally, and not just for centralized power. And that's where there seems to be this continuous kind of balancing act. They want to make the traditional financial institutions happy. They want to keep their control over the currency, of course, and be able to manipulate it and use it and, create as much of it as they want, essentially, and not have some of the barriers that you get with Bitcoin and Ethereum around the way that their currency grows and evolves. So it's a very interesting space. As we just saw in that video, it is also, a lot of it is in flux. There's a lot to be determined still. And that's why it's important that we have these conversations, right? That's why it's important that you do your own research and look into the central bank digital currencies and look into, what's possible on the good side of things too, lobby your governments for the better side of what's possible with this digital technology, right? And in some cases, maybe that's being more open to cryptocurrency, being more open to the blockchain. And frankly, I'm up here in Canada and we have a lot of far-reaching, overreaching financial regulations, but at the same time, we have very safe and I won't say safe, but much more kind of reliable banking regulations that have helped us avoid some of the things we've seen in more unregulated areas where banks can run amok with all kinds of crazy shenanigans and lending to people they shouldn't be lending to and creating big bubbles and all that kind of stuff that always inevitably blows up. And that's part of what the cryptocurrency was also trying to avoid, right? Is a lot of the shenanigans that happen on the banking side and on the government side, So there's no clear solution. There's no up or down vote. Well, I mean, right now it would be a down vote, I would say, on central bank digital currencies. My hope is that this whole trying to appease the traditional financial institutions rather than maybe trying to push the traditional financial institutions to actually evolve and embrace new innovative technology. Instead, they're kind of looking at how can we appease the current system and keep the current system going while becoming more digital? No, the current system needs to evolve or die. And the new system, which is going to be a merging of government and fiat and a digital currency of some type that will happen eventually, balancing out with the Web3 decentralized blockchain-based internet that is also going to happen no matter what. So remains to be seen. We'll keep watching this space. I do want to thank everybody who's tuned in to the Web3 Warriors podcast. We'll be live with another guest. The next one's actually going to be on December 10th. Next weekend, I will be in Art Basel, in Miami, I should say, for Art Basel. And I'm looking forward to that, connecting with the Web3 family out there, the NFT community. I might be able to do some interviews while I'm out there, but they will not be official podcast episodes. The next official episode is going to be episode 44, and it's happening on December 10th. So we're looking forward to that. Definitely tune in. And yeah, I guess until then, if we don't have any other questions from the chat, Sasha's last question was whether there was an effort to protect their own interests or curb bad actors. So they're going to frame it as an attempt to curb bad actors. But as we've seen with FTX, right? I mean, it's hard to argue with the idea that they saw FTX coming, and this was another thing that came out of this video. So why didn't they alert people earlier or shut down FTX in a way that maybe would have helped people get their money out instead of letting things just collapse the way that they did? And, so there's a lot of questions out there, and the answer is not nice, but it seems to be that maybe they wanted a kind of collapse and the markets to kind of go down further and for people to be screaming for regulation as they are now. I've seen Kevin O'Leary on every video that he's in now talking about, we're waiting for the regulators, we're sending our lobbyists out there and we're going to get, these requirements on exchanges to have X amount of fiat dollars on hand and all these other stipulations. So good luck. I would say just avoid centralized exchanges. Try to keep your money in decentralized hard wallets that you own, not your keys, not your crypto is a very key saying in the space that we hear. That would be my solution. But some people want the centralized exchanges to work. They want the FTXs, they want the high yield gains, they want the day trading, and crazy amounts of random cryptos that don't actually solve any problem, but just exist for the sake of creating more yield or creating imaginary money, like they did in the case of FTT, where they had a bunch of the FTT stacked up and they acted like that was worth billions. And then until it wasn't, right? And it was worth nothing. So yeah, it's a big why for sure. No, it's exciting, but it's also could be a little bit scary if you want to look at it that way. But I really think that the technology is a net positive. And so, whether the dystopian kind of controlling and monitoring and possibly restricting access to it, those are worst case scenarios. And there's a lot of worst case scenarios that can play out in finance and in other areas. And I believe here in the West, where we have representative government, where we can throw out governments that overstep and make horrible policy decisions, we should be able to demand that our digital currencies work for the broadest number of people, and they don't just work for the traditional financial institutions. They don't just work for the traditional system, which has left a lot of people out of the traditional system, especially when looking at an international level. We should be innovating and creating a digital world, a digital economy that works for everyone. And the technology is there, and it does involve cryptocurrency. It does involve decentralized blockchain, but it will also involve a digital currency of some type. So it's going to happen. I would ask all of our Web3 family out there to just do your part, speak up for the good side of the digital world, the good side of the digital currencies that are going to come, and make sure that they are in alignment with a decentralized financial system and in alignment with what we're building here in Web3. These regulations should not hamper the economy that we are building on the blockchain right now. And that's really what it comes down to. As long as the CBDCs don't hamper what is happening here, then, hopefully they will evolve and flourish in a way that helps society as well and is not dystopian and is not attacking entire segments of society just because they can by shutting down their access to a digital currency. All right, I could go on this forever because I love politics and I love technology, and this is really a key intersection of politics and technology. But we'll keep watching this space. Again, thank you everybody who's tuned in. We'll be live next on December 10th. And until then, I will catch you in the metaverse. And if you're going to be in Miami for Art Basel, please do tap in with us on Twitter, and we'll catch you out there too. Till next time, Peace out, everybody.